Hi everyone, Professor Lee here, and today I want to talk to you about one of the most important things I teach as a college professor. I'm a tax professor, and I tell my students every year, this topic is the most important thing you can learn in college. I may be a little biased, but I'm going to show you how you can become financially secure, and it's all based on your behavior, okay? So to start off, if you look at this Excel sheet here, I have the average income for a single American, okay? And this comes from, I even included links in the spreadsheet, the Bureau of Labor Statistics shows that the average single American makes $60,879. And I'm going to get to why this is important. On that salary, how much tax do you think that person pays? I'm a tax professor, so this is important for people to know. Of that $60,879, after federal tax, employment taxes, sales tax, property tax, and state tax, you end up paying $14,000 worth of tax. Okay, so you only, on that $60,000 salary, you only have $44,000 left to work with. So, what does that look like in a budget? This is why budgets are so important. In your budget, you're working with less money than your gross, right? You have $46,000 here. These are the average expenses for an American, single American making $60,000. Okay, I'm scrolling down, and you have total expenses are $59,000. Well, average student loan debt and credit card debt payments for a year are $8,964. So the average American making that $60,000 is going to be going into debt. And the Bureau of Labor Statistics says their liabilities are increasing by $10,000 a year. That is not a good situation to be in, right? So today I want to talk to you about ways you can change that. So the first thing I want to show you is, how do you get out of this situation? Well, there's really two things you can do, right? You have to either increase your income or decrease your expenses. Today I want to talk to you why you need to do both as fast as you can. And I'm going to talk about how getting to $100,000 as fast as you can will literally change your life. And let's look at why. So in tax liability, let's say you're doing these two things. Instead of making $61,000, let's put your income up to $72,000. Okay, you get some side income, you're going crazy, you really want to get out of the situation you're in, right? So you're making $72,000, you're still paying, you're paying more tax now because you're making more money, $18,000 in tax, but we're going to look at strategies to decrease that. So in your budget, now that you're making $72,000, with that debt, etc., you're almost zeroed out, okay? So you're still living paycheck to paycheck, but with those savings, you can cut expenses and find ways to start saving money, okay? I'm going to show you one of the ways, my favorite ways to save money and save on taxes. You're going to get returns on your investment that are unimaginable, okay? So, and the first thing is, if you've ever watched the Finance Channel, they've talked about a 401k match. So if you work for a company, a lot of them will have a 401k, and they'll give you a match. So this is a retirement savings account, and if you max out the match, the average match for a company is 5%. So let's say the average savings, okay, cut that part out. So with a 401k, you're putting money into your retirement account, and it's going to save you money on tax. Well, the average American, we're starting with baseline as if nothing was contributed to retirement, okay? The average American's putting away about $379 into their retirement account, okay? So that's actually saving them $106 in tax over the year. If we look at their budget, they've saved $758. Why is that? If they put $379 away, that's the company's 401k match, where a company, the average is 5%, where a company will match up to 5% of contributions to a retirement account. So you get 100% return just from your employer, plus you get the tax savings, which you get a rate of return of 128% as long as you're getting that 401k match because of the tax savings. It's an amazing tax savings opportunity and a way to start building out your savings, and so you're saving for retirement. The average retiree, if you're just doing $379 a year, which turns into $758 with that employer match, by the time you're 65, you'll have $201,000. There's different statistics on this, but that's about average for a 65-year-old in the U.S. and divide that by 20 years. Are you going to be able to live on $10,000 a year in retirement, or 30 years, less than that? That is underfunded retirement, okay? But the average American's putting about that much away or less, okay? So what can we change? Instead of doing 379, I want you to commit to making changes in your life. One of them was increasing your income, getting a side job, finding a way to increase that income, because you need income in order to make these things happen. The other thing is decreasing your expenses. I'm going to show you what can happen if you just go crazy for 1, 2, or 3 years, and then you can live just as you were before, saving $758 a month for the rest of your life. But the most recent 3 years are going to be the most important years for investing because of compound interest. So I'm going to show you what you can do. I'm going to show you you need to get to 100,000 as fast as you can. So let's look at, in tax, you can max out, in life, you can max out this 401k plan up to $22,500 in 2023, okay? And even for 2024, 401k contribution limits, 23,000, okay? So we're going to use 2024. So if in this year you made these changes, 23,000 in your 401k, okay? When you're making 72,000, depending on what stage in life you are in, that can seem impossible. Or if you're a recent college grad, you're like, sweet, I could save 23 grand. I've been used to living on 10, right? Well, if you're able to save 23,000, meaning you got to decrease your expenses, find ways. You may have to live in your parents' basement or find roommates, do whatever you can to cut your expenses so that you could save 23,000. I'm going to show you amazing things happen, okay? So if you save 23,000, how much tax does that save you? You just saved $5,200 in tax. So instead of paying $18,000, you're only paying $12,000. So you already get a return from those tax savings. But don't forget about that employer match. So if we go back to our budget, what happened? We just decreased our income by $23,000, right? So, but now we put 23 in. Why do we have $26,600? Remember, our employer's matching 5%. So we're going to just take that difference minus 23,000. They gave us $3,600 for free, okay? Because we put in that money. Now, what I want you to do, because you're going crazy this year, you're going to save 23,000, right? It's only cost you 17,000 to put that 23,000 away because of the tax savings. So what I want you to do is, with that tax savings of 5,206, I want you to throw that into a Roth IRA account, okay? What is that account? A Roth IRA, you invest in it now, and it grows tax-free. So you're putting it in the market. Any growth, it could grow to a substantial sum, millions of dollars. In retirement, you can take out that money, and the government's not going to tax it. It is an amazing account. And look what you do. If you put in the tax savings, you're right about where you, that 23,000. Like I said, if you could save 23,000 in 1 year, what would happen? I'm going to show you. I bet a lot of you could find ways to do this. If you got to sell stuff, you got to do whatever you can to get to 23,000. What happens when you do that? Well, let's first look at our baseline scenario, okay? Remember, the age to reach $1 million, if you were doing $758 a month like the average American, you're not going to hit $1 million until you're 89. But guess what? You're never going to hit $1 million because you have to start withdrawing that money, okay? So you literally would never hit $1 million. It would take you, you wouldn't get 100,000 until you were 56, okay? And I want to show you the miracle of compound interest, okay? So it took, from age 22 to 56, 34 years to get the first 100,000. Without changing your investment, you just still kept doing $758 a year. It only takes you 9 years to get your next 100,000, okay? That's why 100,000 is so important. Get to it as fast as you can, because then your money starts exploding, okay? And then the next 100,000 is only 6 years, then 4, then 3. By the time you're at 900,000, you're getting it in 2 years, and after 89 or after $1 million, you get another 100,000 every year. Okay, so if you can go, that's why right now is the crucial time. If you can go crazy now, find a way to get $100,000 and get it invested, you're going to start seeing this substantial growth. That's why in this scenario, I'm saying, okay, if you did this for 1 year, I'm going to change this. that amount instead of 758, that's going to equal what we just saved in our 401k. In 1 year, we put away 23,000 and we ended up with, how much did we end up with total? We ended up with almost $32,000 because of that employer match and your tax savings. That's not a bad return on your investment, right? So let's do that return. Our return was 8,727, 87.27 divided by, we only put away 23,000. Where can you get a 38% return? Anywhere, okay? I mean, you got in Bitcoin when it was hot or something like that. This is a 38% guaranteed return every year. If you do this, this is incredible because you're guaranteed to get that employer match. It's in your contract. If you have it, of course, right? And many companies do this. And then you're guaranteed the tax savings because it's based on your tax rate. So if you decrease your taxable income, you're going to get that tax savings. Guaranteed 38% return. That's crazy, okay? What does this do to your retirement savings? If you just do this for 1 year, can you go crazy for 1 year? Cut those expenses? What'll happen? Let's look at this. We put $26,600 in our 401k. In our Roth, we put the tax savings. What happened? And I'm actually going to reverse those two because I want to get our baseline. I'm going to copy that over so we can do a comparison. So I'll copy that, paste it here. So that's what we're going to be comparing to, okay? So now I'm going to do that. So our investment in the 401k, $26,600, and our investment in the Roth IRA, $5,206. Okay, what just happened? Look at the age to reach $1 million. It was 89 before, and you just went crazy for 1 year, and look, you kept your investment of 758 the same for the rest of your career, okay? Can you do this 1 year? How many years did you just cut off getting $1 million? 20 years. You get $1 million when you're 69 instead of 89. And how much did you save? $23,000. Crazy. You would have, when you're 65, when you retire, you would have $675,000 in a taxable 401k account, and you would have almost $100,000 in a tax-free Roth IRA, and you only invested $5,000 in that Roth. This is crazy. You get your first $100,000 when you're 37, okay, instead of 56. And look how fast the next 100's at 46, okay? That's why it's crucial to get to 100 as fast as you can, okay? You literally saved $23,000 first year out of school or whatever it is. You made substantial changes in your life, saved that money, and look where it put you. You went from struggling in retirement to having a great retirement, okay? And guess what? You only did it for 1 year, and then you did the same thing the rest of your career. Well, I have a feeling if you do this for 1 year, you'll like what you see, and you'll say, wow, that was, I mean, my account, in 1 year, I have $31,000. I bet I could do that 1 more year. Remember, get to 100,000 as fast as you can. What if you just applied the same strategies? You invest $23,000 and get a $9,000 return on it. What if you did that in year 2? And I need to copy values here. I paste them there. What just happened? I'm going to back up one more time. We need to paste our scenarios. If you just did it for 1 year, it took 20 years off of getting $1 million. Okay? Now let's do, I'm going to copy the scenario, copy, paste there, the values. Just saving 23 grand your first year, you just cut 20 years off of getting $1 million. How crucial is that first year, right? Well, year 2 is pretty crucial as well. What if you did the same thing in year 2? What's it going to look like? And again, you've gone crazy only 2 years, and then you went back to your old spending habits. You did what everyone else does for the rest of your career, okay? What just happened? Well, you've only saved $46,000 out of your pocket, and you've gotten an $18,000 return in 2 years, okay? What does your account look like? Now you're going to hit $1 million at 62. Just by doing this 2 years, you have $1 million at 62. Net worth at 65 is 1.3 million, okay? If you do it 2 years, and then you're saving nothing the rest of your career practically, okay? Again, all of this is assuming a 7% return on your investments, which is, it's not too aggressive, not super, I mean, a lot will do 6%, so you could change the percentage up here if you wanted, and it'll change things, but our others were 7%, okay? So, but look at you. You have taxable of 1.1 million and $184,000 of tax-free money. You just saved for 2 years. Okay, so I'm going to copy that. And look how fast you got your first 100,000. Remember, we want to get 100,000 as fast as we can. If you just did that for 2 years, you're going to have 100,000 at 29 when you start at 22. Can you imagine being 29 years old, having 100,000 in your retirement? You're like, gosh, that's going to start doubling. Even if I'm just saving 758, I'm going to start seeing that double in 9 years, and then in 6 we'll get another 100K. So let's just do it for 3 years. Let's assume you went crazy for 3 years and you hit 100,000, because remember, you're only saving 23 grand a year, but with all of the tax savings and your employer contributions, you're going to hit 100,000 in 3 years, because you just got $27,000 of free money. Okay, what did you end up getting? Well, you can see you've now saved 102,000 between your contributions and the matches. When do you hit $1 million? At 57. I keep reminding you, you've only done that for 3 years. The rest of the time you've invested $758 a year, like the average American. Well, the average American, because they didn't go crazy for those first 3 years, they're going to retire with $201,000. If you just did this for 3 years, you will retire with $1.8 million. Okay? 1.5 million of that taxable, 268,000 tax-free. Okay? This is just amazing stuff happening here. Okay? So, what do you want to do? It's all based on time. Get to 100,000 as fast as you can, because you'd hit 100,000 at 24, 200 at 34, and then 39. I mean, you hit $1 million at 57. And once you're 57, you have a lot of life to live. Well, guess what? You can see you get 100,000 in 2 years at that time. Soon you're going to be making 100,000 a year at 57 from your investments. It's amazing. So that's if you go crazy for 3 years. What if after that you're like, okay, I've been investing 23 grand a year. Now this year I'm finally going to get that car I wanted, right? That truck, whatever it is. Now you can live like everyone else, and you've done the sacrifice your first 3 years. Okay, if you make that sacrifice, if you get to 100 as fast as you can, it's amazing to see what happens. And if everyone could do this, there would be a lot less stress living paycheck to paycheck, etc. Because it's just the behavior. You got to make more money. You got to cut some of your expenses, and then this strategy, gosh, who knows about this strategy? There's these tax strategies that are amazing. Again, this may not apply to everyone. Not everyone has a 401k match of 5%. If you don't have the match, you can still put money in a traditional IRA, okay? Or a 401k if your company has it. There's always the Roth IRA as well. There's ways to put this money in retirement and really get to $1 million as fast as you can. What happens? Let's just say, we're kind of heavy in the taxable bucket. What if we just decided to put the max IRA, Roth IRA contribution? You're like, well, I'll have 1.5 million taxable. I really want to up my tax-free, okay? What if I just did $6,500 a year and just did it for the rest of my career, okay? So the rest of your career, instead of, you're not going crazy now, you're saving about 7 grand a year instead of 23. What happens? Tax-free money, you end up with $1.7 million almost of tax-free. You can take that out once you're retired, you can take that out, okay? Any of your contributions you can take out at any time with the Roth, but that's for another video. And then you have 1.5 million taxable, net worth of 3.2 million. How nice would that be when you're 65, okay? And you hit $1 million when you're 49. How cool would that be, okay? And you're really not saving a ton throughout all of the years of your career, but you start like crazy, okay? If you do that, it'll change your life. And in subsequent videos, I'll do more examples of what you can save if your income's lower, right? If you can't get to 72, what could you do if you were at 30? Or what if you're 140? What could you do, etc.? Okay? Have a good one, guys.